You've got $100,000 and you want to compare putting that into most typical investment like stocks and bonds, as you say, CDs or certificates of deposit, treasury bills, options, futures. I call them paper products, and let's just talk about stocks. They're all generic. Let's compare putting that 100,000 cash into stocks with putting the same 100,000 into real estate. So I break it down into 4 questions. The first question goes like this. You're putting your $100,000 into stock. How many dollars worth of stock can you buy with 100,000 cash?
100,000.
Yeah, it's not a trick question. It's 100,000. I know some people can buy on margin, but it's a small number of people and it's only a limited number of stocks. And if the stocks go down in value, they do what's called a margin call. For most people with 100,000 cash, they can buy exactly $100,000 worth of stock. Nothing good or bad about that. Let's compare that with putting that same 100,000 into real estate. So let me ask you the question. With 100,000 cash, could you buy a $100,000 property?
Yes.
You could. Could you buy a $200,000 property?
Yes.
Of course you can. You get a 50% mortgage. You can buy a $300,000 property with a 67% mortgage. You can easily get a $500,000 property with a $400,000 mortgage with 80% loan to value ratio. And you can easily buy a $1 million property with a 90% mortgage. It's 10% down. So let's compare the difference. Everything goes up by 10%. Your stocks will have risen from 100,000 to 110. Your real estate's gone from 1 million to 1 million. You've either made 10% or 100%. Now, for the skeptics that may be watching, what if everything goes down by 10%? Well, it's true. Your stocks will only have gone from 100 down to 90. You've only lost 10%, whereas our $1 million worth of property will have gone to 900,000 and we've wiped out our equity. But I'm not too worried about that because even after the GFC, which wiped out a lot of property values, they came below their mortgage. If you manage to hang on, the values have risen way above there again. So number 1, you can buy much more value of real estate than you can stock. Number 2, you've spent your $100,000, it's gone into the stock market. The day you bought it, what's it worth? Well, it's worth $100,000. By definition, it's an electronic market. It doesn't matter whether you're in Helsinki or Bombay or Peru or Ecuador, you pay the same price as anyone else. The day we buy that property for a contract price of $1 million using 100,000 cash and a $900,000 mortgage, what's it worth? Could it be worth $1 million? It's possible. Could it only be worth 800 and some fast-talking agent or seller talked us into paying too much for it? Yes, it's possible. It happens every day of the week. But by the same token, is it not possible that that property that we just bought for a contract price of $1 million is worth 1.5 million?
Absolutely.
Absolutely. It happens every day of the week. Again, we just covered this a moment ago. If you don't believe that will happen to you, it never will. You'll never find them. You'll never pursue them. And you'll say, see, it doesn't happen. But those of us who believe it happens and expect it to happen, it will happen. Maybe not every day, maybe not every week, but once or twice a year. So you can buy real estate for more than you're paying for. Here's question number 3. You've spent your $100,000 on stock. It's worth $100,000. What can you personally do to increase the value?
You already bought $100,000 worth of those stocks. You could tell your friends to buy some stocks. You can buy the merchandise of the stocks.
Right.
And that's about it.
You can write letters of encouragement to the directors, hoping that, yes, we can hope.
We can hope.
And we can pray.
And we can pray.
And that's about it. Let's compare that with that property. We spent $100,000 cash with a $900,000 mortgage buying a property worth $1 million. It's worth 1.5 the day we buy it. What can you personally do to increase the value of that property?
You could paint it, you could do landscaping, you could add a pool, you could
put in a fence, put in security lighting, put in an alarm. I mean, the list is endless. I always say there are 101 things you can do to massively increase the value of your real estate. I'm putting my money where my mouth is. I've got the book with that same title. It's the longest title on Amazon. It's not available right now. And so that's not the point. But yes, you can do so many things. You're limited only by your creativity. I always say the most valuable piece of real estate is the 6 inches, give or take an inch or two, between your right ear and your left ear, because it's what you create in that space that ultimately determines your net worth. And the 4th and final question, imagine everything's doubled in value. So the stocks that we paid 100,000 cash for, they're worth 100,000, we can't do much to increase their value. Let's imagine over time, we don't need to specify how long, it's doubled from 100,000 to 200,000. What must you do to get some of the benefit of that increase in value?
Take it out.
Yeah, you have to sell it. And to me, it seems counterintuitive. We invested in it because we wanted to grow, and when it grows, we have to take it out, we have to sell it. And then you pay capital gains tax and all the other things that go with it. Let's compare that with real estate. Our real estate would have doubled as well, right? From $1 million to $2 million, right? Yes. Well, not quite. That's what most people think. It was worth 1.5.
Yes.
So when it doubles, it goes from 1.5 to 3 million. And I'll ask the same question. What must we do to get some of the benefit of that increase in value? And an answer could be, well, let's sell it, but then I've got the same objections. We'd pay a selling commission, we'd pay capital gains tax, we've got what's called depreciation recapture tax. Why don't we just go back to the bank and say, Mr. Bank Manager, can you remember when I bought this property and I said it's worth $1.5 million? And you said, well, no, Sonny, you're paying $1 million for it. That proves it's only worth $1 million. He'll say, well, I have now a new appraisal from your bank valuer who says it's worth $3 million. Will you please give me a new 90% mortgage? And banks are in the game of taking depositors' funds at a relatively low interest rate and lending them out to people like you and I who want to buy property at a much higher interest rate. So they say, well, of course we will. So when they give you 90% of $3 million, we're talking $2.7 million. Now, it's not your money yet because you have to pay off that original mortgage, but we pay off the $900,000 original mortgage. We've got $1.8 million. Bekkah, ask yourself, is it earned income? No, we didn't swap time for it, so there's no income tax on it. Is it the sale of something? No, no capital gains tax or stamp duty or anything. It is tax-free money in our hands to do with as we see fit. And what I do with it is use it as a down payment, 10% down payment on an $18 million property. Now we've got $18 million in the original $3 million, we've got $21 million in real estate. So in my world, our stock would have gone from 100,000 to 200, and our real estate's gone from 100,000 to this
Quite
21 million. And that's how it works in the real world.